Samsung has turned its focus back on the air conditioner segment. While the South Korean giant is a relatively small player in the air cooling space currently, its financial might gives it the room to throw competition off track on pricing. Weather changes have also influenced buying pattern of consumers. So where does this one leave? All of this leave one of the country's largest air conditioner companies, Blue Star. Let's put that question to Mr. B. Thiagarajan. He joins in right now on the show. Mr. Thiagarajan, good having you. Thanks so much for joining in. Business thus far, I'm sure, has been pretty robust, but this mention of Samsung wanting to get back to market dominant leadership position in 3 years from being a measly 4-5% right now got us thinking as to whether it can bring about some disruptions in the business model or in the business landscape for air conditioner companies. What are your thoughts, sir?
Good morning. Merry Christmas to you and your colleagues and audience. Thank you for talking to me. You know, the penetration in India for room air conditioners is just around 6%. It has a long way to go to reach 25 to 30%, as is the case with other developed countries. Now let us look at the market size. It is around 6 million. This year it should be ending it with around 6 million units. China's market size is close to 90 million. So you can imagine we have a great potential in this country, not only in metros but also tier 3, 4, 5 towns. And given this, I think competition will intensify. It is very well anticipated, and we should learn to compete.
No, Mr. Thiagarajan, so that point is well taken. I mean, the size of the market, the normal ACs giving way to branded ACs and everything preferring that is known. But what if a large company comes out and tampers around with the pricing? The growth may not be a question mark, but the profitability and the margins on that growth over the next 2 years, if a large competitor comes out at cutthroat pricing, will that impact business for the next 12 to 24 months?
Good question. 2-3 points. Number one is, if the volume is going to increase, the scale effect will help companies to reduce the prices. That is number one. Number two is the energy efficiency regulations or the sustainability related refrigerant issues are going to be impacting the cost. More the energy efficiency, the prices will keep going up, the initial cost of purchase. So in this particular situation, you have to continuously innovate. You have to also invest disproportionately in building the brand, because you have to reach out to many more markets and be relevant to the consumers. So therefore, competing is what? You should be able to do all these things. You should be able to keep the cost lower. You should be able to invest in brand building and distribution expansion, and that is about competing. I want to remind, when in 2011 Blue Star decided to enter the residential segment. Till then we were a big air conditioning player, like the corporate and commercial institutional segment, we were leading. When we wanted to enter that particular space, the residential space, there were doubts as to whether Blue Star will be in a position to compete and survive in that marketplace. Year on year, from 2011, we have gained market share. Today we enjoy close to 12.75% market share. So therefore, we will be able to compete in the emerging situation. But it is, as I told you, like a T20 game. There will be summer, there will be hot summer, there will be weak summer, there will be regulatory changes, and we need to compete. We are prepared for that. We are investing for that.
All right, Mr. Thiagarajan, my next question is to do with seasons and the fact that some of the seasons have been extended. And in terms of sales, how has the change in seasonality impacted how things are panning out? So what is the kind of volumes? Of course, we all know that we are in the winter season where volumes historically have been subdued. But, there is also this talk about the months of November and December being relatively much warmer as compared to the last few years. How has business been in keeping in mind the seasons right now?
Better than last year. So till September, if you know, the market was growing at around 15% compared with the previous year. But October, November, December, on and off rains were there. You know, the rains were also extended. And I am also of the view that the overall economic slowdown will to an extent impact this segment, even though this segment has been doing well among the consumer durables. I would say, we don't have the figures yet, the walk-ins are good, and it is not disappointing like many other durable segment. The demand is robust. It may be lower than what we would have anticipated. And the demand continues to be good in online. It is good in tier 3, 4, 5 towns as well. Having said that, the demand is for low-end products. That means even with an inverter, the low ends of inverter air conditioner only are being bought. Second thing is a lot of consumer finance related sales are taking place. Close to around 40% of sales are under installment schemes. For us, it is actually the month of March will be a very critical month. Prior to summer, the stocking will take place by dealers and also consumers will begin to buy. Our assessment is this winter is going to be a short one, summer is going to be a long one, and it is likely to be severe. I would anticipate good sales in March as well as summer months.
So there is also a talk about dealers having a high inventory buildup at this point in time. Of course, this is with respect to the industry as a whole, and of course, this is largely also because of slowing sales. Is that also your observation for your company, and do you expect the sales to pick up eventually over the next few months?
As far as my information goes, it is not unbearable levels. See, they would have anticipated, in my view, 500 basis points more sales during Diwali season. Because of rains, it wouldn't have taken place, but during this New Year sale, the stocks will be done. The other thing is, this is not an energy label change year. Originally, the schedule was 1st January 2020. The energy label would have changed, which means 5-star would have become 4-star, 4-star would have become 3-star, so on and so forth. But there is no energy label change this year. Therefore, even if the inventory is there, February, March, it should get consumed. As far as Blue Star is concerned, we are very, very comfortable in terms of inventory.
Actually, and I was just wondering for the industry at large, Mr. Thiagarajan, are distributors taking in as much inventory as you would have thought? Because again, I drive the conversation back to how there are new entrants like Hitachi, Samsung, which are trying to compete thick and fast. A dealer was telling us that everybody's waiting for the impending summer season, as well as the pricing strategy of some of the all of you large players before deciding on how much inventory to stock up.
I tend to agree with you, because in a tight liquidity position, instead of doing 15% more than what is required, they are all taking what is reasonably required for the sales. And then all over, if you see, there is negative sentiments going on. There is some strikes and other things that are going on. Many other industries have not revived. And therefore, the dealer sentiment is also that why do I go ahead and invest much more than what is required? And therefore, I am of the view that one should wait till February, March to be expecting the dealers to stock up more. That's why we are very clear. We have been focusing on cash flow, we are focusing on the capital employed, we are focusing on inventory control, therefore. We are not, so much concerned about somebody is not stocking. Eventually, the consumer has to buy, isn't it?
Yes, he does. So just wondering, just for accounting purposes, Mr. Thiagarajan, if not 15%, which is the normal, what is the quantum of intake that they are doing right now, the dealers? That is one. And part. Okay, can you just give me first the number first? Yeah.
Yeah, so one would have anticipated during post-Diwali period that the growth should have been again 15%. You know, all of us are greedy. We want the market to continue to grow. But actually, I think the overall industry during post-Diwali period would have grown somewhere around 5 to 7.5%. That is my view.
Okay.
It will not be 15%.
Okay. And last question, sir.
But the full year,
please
there
carry
is
on.
a possibility. Full year, there is a possibility that it will grow beyond 10.
Okay, well, cross fingers for that. We need that to happen. Just one last question. Where does this keep your overall capacity utilization levels at? Is it optimum? Is it slightly subpar? What is it currently?
We are very comfortable in the sense that we will be, if you take into account the seasonality, we will be operating at around 85%, and that is quite comfortable. So it gives you the headroom for in case the summer is extended, you will be able to produce more.
Okay, Mr. Thiagarajan, I wish you all the best, or we wish you all the best for your market share to move over this 12.5, 12.75% in the years to come as well, and for the impending season 2. All the very best. Thank you so much for speaking to us at BloombergQuint.
Thank you very much. Best wishes to you and your colleagues.
Well, that's a very confident management of Blue Star. We're talking about tackling or being prepared for tackling competition. Well, they would, of course, naturally say that as well. The market's very flat. We take a break. Up next, we discuss the business outlook with Altaf Jiwani of Welspun India.